right, welcome back everybody to our second episode of Mortgage Talk. I've got Desiree Stewart here today and myself, Alyssa Iddings. We are here to talk about what's going on in our mortgage market. So Desiree, do you want to start off and talk about what's going on with interest rates, what changes them, what's kind of happening in our world right now?
So with interest rates, it's always going to be the biggest topic. People are going to talk about interest rates from now in the next 110 years. So the biggest thing is, we always have ways of trying to project what the interest rates are going to be, but we really don't know. We do know some factors that do go into interest rates is the economy. So I just kind of keep it a little brief when people do ask about the rates and just say, when the economy is doing well, the rates are not going to look great. I just try to let people know that interest rates can change, but typically has something to do with the economy. So what about like when you have conversations with your home buyers, when you trying to determine what type of loan they should get? How does that conversation go for you whenever you're trying to understand which program to put your clients in?
Yeah. So there's a lot of different programs out there. We've got our standard conventional FHA, VA, USDA. Some people call me and they have an idea in their mind of what they want to fit into. Yeah. But I always tell them, let's, keep our options open. I'm always going to look into all of them. Yeah. The only one that I'll pretty quickly rule out is a VA loan. If you're not a veteran or the spouse of a veteran, that's probably not going to work out for you. But the other three, I'm always going to look into. They've got their own restrictions and qualifications. So I'll look into all of those and see kind of what's best for you. Mm-hmm. And it really does kind of go back to our initial conversation over the phone when we're setting up our goals. If you tell me that you've got a lot of money to put down and you want a lower payment and that's, more important to you than putting zero down or, as opposed to putting no money down, then maybe, USDA might not be the best program for you, especially if you're going to be putting more down and you won't be required to have private mortgage insurance, then that program might not be best for you, even though people rave about USDA, because it is a great program for a lot of people, but it doesn't mean that it's great for everybody. Right. And that goes to, for every program that there is. So, always listen to your loan officer. We'll look into all of the programs. Just because somebody, your friend took out a particular type of loan doesn't mean that's the loan for you. So yeah, trust your loan officer to look into them for you.
Yeah, because each program has stipulations when it comes to your debt to income, credit score, and things like that. So again, that's just a great conversation to have with your lender. Yeah. But yeah, that's great.
Yeah. So with the interest rates changing, are you finding that it's a good time for a lot of people to start looking into refinances?
So I have had a few conversations about refinancing, and the way I approach it when people are they're thinking about it, but they're kind of still on the fence. The rates is always going to be that trigger. Like, well, I'm just going to wait till they go down a little bit more, and I'm like, no. So let's look at if you're going to use your refinance. What are you using it for? Mm-hmm. Are you using it to consolidate? Like, are you refinancing so that you can actually use some cash to get rid of like an auto loan that you are paying like maybe 10% on, or a credit card that you're paying like 28% on? So just understanding when it comes to refinancing, what is the point of the refinance? We have to understand why they want to do that so that I can, just give them the best scenario of what that looks like if they're going to be refinancing to pay off debt. Mm-hmm. So that's kind of one that I've had recently, is just trying to understand, consolidating is the reason why they want to refinance.
Right. Yeah. I have had some people reach out to me to look at refinancing just for lowering their interest rate. And then, we run those numbers and we're happily surprised to find out that we can also get rid of mortgage insurance because their home has appreciated. So that's a really exciting thing for people to look into as well. And then also, when we're looking at a refinance, we can also look at lowering the loan term. So, I've had some clients who they end up with the same payment that they had before. They're not lowering their payment, but maybe they're going from a 30-year to a 20-year. So they're shaving those 10 years off their mortgage term, which is, always exciting and fun to do. So yeah, if you have purchased in the last year or two, maybe 3 years, and you haven't looked into refinancing, definitely reach out to your lender, see if maybe that's something that is a good idea for you. We always want to have those conversations of what's going on in your life to just figure out what's best for you.
At some point, most people don't keep their mortgage for 30 years.
Right.
So that's why when I have the conversation, people like, 30 years, and the way I explain it is, it's really giving you the lowest payment because you're stretching it out as far as you can go. But you can do a shorter term, especially if someone's been in the home for a while. So, good information there.
Yeah. So I think the hardest part with shortening your loan term is having that fit with your DTI, your debt to income. You want to talk about what a debt to income is a little bit?
Yeah, so the debt to income, you're funny. Your debt to income is basically looking at your income compared to your assets, or your liabilities. So when you have, and what we look at far as our liabilities on your credit report is what we look at. So it's not, all your other bills that are not reflected on your credit report. It's only the ones that are on your credit report that we look at. And if we take your income and we add that up and do we divide or multiply? I just had to bring, I think we divide. No, do we divide or multiply to get that?
You divide the debts by your income.
Yes. Divide. See, that's why you have to have other LOs to help you, because sometimes it's a lot of information to keep up here. I knew it was divide and multiply. I knew it was that, not add and subtract. But yeah, just knowing your income versus your debts. That's how we get a percentage. And once we get that percentage, that could put you in a certain type of program, loan type, when it comes to understanding that DTI.
Yeah, so DTI is one of the biggest ways that we're going to figure out whether or not somebody qualifies. There's a lot of different ways that we can kind of manipulate those numbers. So if you're having an issue with your debt to income, maybe we're only using your base income, but you have a 2-year history of bonus income. So we can try and add that in. Maybe you've got rental income that we want to add in. And then, if we've exhausted all of your income sources, then, we can always go to the other side of it, your liabilities. We can look at what can we eliminate? Can we get rid of that car payment? Can we pay off these credit cards? Is there another way that we can kind of figure out this equation to make it work out best for whatever program we're going for?
Yep. So yeah, DTI is definitely a good conversation to have with the home buyer.
Right. Yeah. Another big one that I have is escrow accounts. Yeah. Have you had a lot of conversations regarding escrows?
I have. A lot of people need to understand what escrow is. So escrow is just making sure that your principal and interest also includes your property tax and your homeowner's insurance, meaning that you're going to basically be paying a portion of that each month, and then the lender servicer will send out those payments whenever they're requested by your insurance or the county where you live. Those taxes will be paid there. Right. But yeah, some people are for it. I have a few people that may not want to do it. Have you had, or what would you say would be a reason why escrow may not be needed for a home buyer?
Yeah, so for the most part, I would say an escrow account is pretty beneficial. It's really just like a checking account that we're holding in your name, that we hold this money to pay those bills when they come due next year. But, if you were to sell the house before then, you would just get refunded, just like if you closed a checking account, whatever money was in there, you would get that back. So for the most part, I do believe that it's a good idea to have the escrow account, just because there's no chance of you forgetting to make that payment, and things happen, life happens, and sometimes we forget. So it's just like a security net to not forget. The only time that I've had somebody that it really seemed like it wasn't beneficial to him was because, not immediately after, but within a year after him taking out this new loan, he was planning on selling another property and then paying off this other loan that we were doing.
Okay.
It was going to be like 9 or 10 months later, he was going to end up paying it off. And so there would not really be a reason for him to have an escrow account, because by the time those bills became due again, he would have paid off this loan and we would have refunded him anyway. So we would just be collecting for nothing.
Yeah.
But, there are also some people that just really like to take care of their own finances. So, there are requirements. An escrow account is required for most loans, but you can talk to your lender and see if you qualify to waive your escrows if that's something that you're interested in. But again, there's not much downfall unless you're in a really specific situation like that. So it's definitely something that you just want to talk to your lender about, see what's best for you.
Now, one thing I will point out, because this has come up in a home buyers class that I had, they asked, so I have a mortgage and my mortgage payment went up. And so I was like, what do you mean your payment went up? Like, did you refinance? She was like, no, I didn't do anything. I just got a bill in the mail saying my payment went up. So I asked to see it. So I was like, so your principal and interest payment for your home did not go up. It was your property tax. So that's another thing when it comes to escrow account. The servicer will tell you, okay, it looks like your taxes increased this year. We may need to add on additional $80 to your monthly payment to cover once those taxes are due. So that's another thing that people think that us, the lenders, are increasing their payment, but we're not. We're just increasing it to cover your property taxes.
Right.
So that's another thing that I had recently, a conversation with a client.
Yeah. So that reminds me, it was actually somebody in my neighborhood that I was talking to. There was a roofer that was going around and knocking on all the doors, and I'm not naming names.
Did he come to your door?
He did come to my door.
Okay.
And he was knocking on all the doors and he was saying, there was a hailstorm and your roof was probably damaged by it too, and we can go through your insurance and I'll get you a free roof. Okay. Yeah. So this happens. My neighbor ends up getting their free roof.
Oh.
Okay. And then a few months later, I guess their insurance had, it was time to pay their insurance, and their insurance had gone up a lot because they had filed a claim to get this new roof. And he was really upset because he's like, my mortgage payment went up, and it was kind of the same thing. Right. He's like, why did my mortgage payment go up? Right. And so I was like, well, let's take a look. So I looked at it and I was like, well, your mortgage payment didn't go up. Your principal and interest didn't go up. It was your homeowner's insurance. And I wonder if it's because of that claim, because you got that new roof. Yeah. And, because it's not like you just got a new roof because your roof was old. You filed a claim, and when you file a claim, your insurance typically goes up. And so, so it was, he went from being really excited about his brand new free roof to realizing it wasn't so free because he paid for it over time and the increased
just
insurance.
The old saying from my parents, there's nothing free.
Free.
If anybody says it's free, there's a hidden cost somewhere. Like no one, a whole roof. Come on, Alyssa.
Yeah. That's what I tell people with down payment assistance too. Like free is never free, right? It's not. You're not just getting free money. There are stipulations to it. Most of them have an origination fee up front at least. And then there's the whole forgiveness plan of it. So it's great for some people, but you need to know what you're getting into when you make decisions like that. So definitely really important to talk to your lender about those things as well.
Yep. Cool. That was a good story. I had to tie in the escrow because principal, interest, property tax, insurance.
You know what else I've noticed is there are actually a lot of people that during the pandemic were using, there were some banks that were just, it felt like they were like slinging arms, like they were slinging burgers. Okay.
What?
It was just left and right, just like everybody that I had.
What do you mean
also
by arm?
an adjustable rate
Okay,
mortgage.
all
Yeah,
right.
yeah.
Just clarify.
So-
Because I'm we're getting ready to fight. Like,
No,
I'm
no.
like swinging arms. Look, I'm an 80s baby, and,
No,
me and my cousin, we fought a lot. So it's like we were fighting the bank. Look, clarify for me. Clarify. Sorry. My bad.
No, you're fine. So yeah, so I mean, they were giving out these arms left and right, and everyone that I spoke to had no idea what that meant.
Right.
Even. They had no idea what they were taking out. And now all of a sudden we're at that point. We're 3 years from when that happened, and they were 3-year arms and they were 5-year arms. So over the next 2 years or so, I feel like I'm gonna have a lot of people calling me because they that rate is adjusting.
Yeah.
They're hitting that first adjustment, and it's,
I'm going to definitely have that conversation with some of my clients because, I haven't had a lot of people talk about arms, but like educating them on, like, if it's a 5-year arm, really year 4, you need to be kind of understanding what's getting ready to happen because if you wait till year 5 and the interest rates is 7.5 or just a higher rate than what you had, then that's what your interest rate is about to be. So that's a good point. I'm going to make sure I have more conversations to understand if my clients are in an arm.
Right.
Because sometimes, like you say, they don't even know they're in an arm. They think they're in a fixed rate for whatever term. So that's a good one.
That adjustment period just kind of sneaks up on them. And I had a lot of conversations with people because when you're in that time period, you might not be thinking about it. What if there is a first-time home buyer who took that arm and said, whatever, I'll just refinance out of it later into a fixed rate, but during that time frame, they switch professions. Yeah. And now they don't have any usable income. Right. And so they, they're not ready to refinance into a fixed rate because they don't have any usable income. So back to their debt to income ratio, it's skyrocketed because they have no usable income. Yep. So it's all about our long-term plan. We always want to talk about our long-term plan when we're making these short-term decisions. Yes, maybe that arm was best for you in that moment, but you need to have your plan for if that rate adjusts and your mortgage payment is too heavy for you. So we always should have a plan for later on. That's a good point.
Yep. Cool. Well, one thing I can say that me and Alyssa both benefit from is we have some really good realtor relationships. Realtor, I got the realtor, it's a side joke, but never mind. So, like, when it comes to helping your clients and developing that relationship with your, realtor partners, how do you feel like, is that something that you think is you have to understand the clients that you're getting, or do you tell me what that relationship looks like for you, for your realtor partners?
Yeah. So, I mean, we have to have realtor relationships. I mean, that's, the bread and butter of our business, really. Yep. So, and also I feel like it's really important for me to know my realtors because, just like any other person that you're going to hire, you're going to use whoever you kind of gravitate to and jive with a little bit. Yeah. And so I need to know my realtors because whoever they're sending, they all have their own way of doing things. Yeah. And so it's a lot smoother if I know what that person's expecting because they're coming from this specific person, if that makes sense.
Oh, it does. To me, it does, because
Yeah. Like, everybody's just a little bit different. Yeah. And I also know, some of my realtors are more confident talking about specific parts of the loan process, and they actually like talking to the client about that. And so, I have one where we talked about it from when we first started working together. We said, okay, let's go through our process together and figure out how we're going to do this. So, she really likes when I go over the loan estimate with the client,
Okay.
but then she wants to go over the closing disclosure with the client, and then they call me if they've got questions. But that's like kind of her thing that she really likes doing that. And for me, I would just assume that I'm going over both unless I had that conversation, and I knew that particular, and it's only her. She's the only one that does this. So but yeah, she just really likes to be involved and kind of, hold the client's hand and show that she cares and she's there for them by doing this specific part. So it really is important for not to just have to know them, but you have to like know them and know what their styles are and know how they work.
How they like to do things. Because for me, I can get a realtor who they want to do a 3-way call. We kind of have a get to know each other call, and then I may have another realtor that just shoots me a text with a person's name, and I'm like, thumbs up, gotcha. Okay. Yeah. And so it's interesting how and it's just like your friends, like your friends, different personalities, different way they do things. So it's kind of the same with the realtors, and you'll know, like us as loan officers, we know, okay, yep, I know who that text is from. Or I know I'm going to have a, pretty good detailed conversation with the realtor and their potential home buyer together. And I kind of like, it's not one that works better than the other. It's just kind of how they do business.
Yeah, I'm happy to do it however they want to. Yeah. I've got another one that she loves 3-way calls. Loves them. Yeah. Absolutely loves them. And I don't mind. I don't care. So like the second there's maybe even the tiniest bit of confusion, we're like, 3-way call? Let's do it. Let's just get on 3-way call. Let's just clear it all up.
There you go.
And it's great. And it always works out. But that's the way that she works. And if I didn't know that about her, there would just continue to be confusion.
Right. Yeah. And a call for me is always, even with us, with our own processes and underwriters, I can read an email and I'll be like, okay, I'm not getting it. And I can just pick up the phone to my processor and be like, okay, what do you mean by this? Yeah. And then when they tell me, it's just like the heavens just open up, but I get it. But yeah, so realtor relationship is super important for loan officers and home buyers, so that we can kind of, I tell all of my clients, like, we're a team. Like, you got to have all these pieces. We got to have you that want to buy the house. We got to have the person who's going to show you the house. And then you got to have us who helps you purchase the house, financing, figuring out all the numbers. Like, it's a team. So, yep, I love all my realtor friends. So the next subject I guess we can move on to is the life of the loan and savings. So when you hear life of the loan, what exactly comes to mind for you?
Yeah, so when we're talking about a refinance and we're looking at life of loan savings, so, we might, in particular circumstances, you might be refinancing and getting a lower payment, but over time you might be paying more than what you would have paid if you didn't refinance. So that's part of figuring out whether or not a refinance is even a good idea for you, is figuring out how much money you're going to spend over time and seeing if that life of loan savings is going to pan out in your favor. Now, that's not the only reason why you should refinance. There's some people that even if they are going to pay more over time, their mortgage payment is just too heavy for them and they have to get a lower payment. It's like do or die for them. Yeah. And so, again, it's not the only reason to do it. So it really depends on the particular person. Right. But if I'm just looking at somebody who's like, hey, interest rates are lower and I think that I should refinance just because it should be a good time, or I think it's a good time. Right. They're not in that kind of they're not struggling with their payment. Yeah, they don't need to. They just want to do, what's good for the long-term benefit of their loan. Then that's what I'm going to look at, is those life of loan savings and seeing if, it's actually going to be beneficial for them.
Yeah. And I think the biggest one to me comes to mind is obviously the PMI, which most clients don't know. Like, that private mortgage insurance is attached to some people's loan if they don't bring 20%. What is that? Am I getting it confused? If they bring less than 20%, then they have that private mortgage insurance
On a conventional.
on the conventional. Okay, my brain was going all over the place for a second.
FHA and USDA, you have it for the life of the loan.
For the life of the loan.
No matter
but
what.
conventional, and then understanding that once their loan to value goes down to 80%, it automatically comes off. So it could be, I think a conventional I have now has around, I want to say $86. So that's part of their mortgage payment along with the principal, interest, taxes, is insurance, and then that private mortgage insurance. So they currently have that $86, which could be removed once we have some time that has passed where the value of the home, you said depreciates, can appreciate, can also knock down or take away that private mortgage insurance. So again, that's part of a savings that they can get as well.
Right. Yeah. So if you took out, we'll just use some easy numbers. If you took out $100,000 loan and you put, zero money down, you're at 100% value, right? But then over time, if your home appreciates to 120, then there's your 20%, and now you're at an 80% loan to value. Even if, your loan would be lower than $100,000 at that point because you've been making payments, but let's just assume you didn't. And for math's sake. And, then you're at 80%, and then you could refinance and get rid of that. That would, you'd probably be starting with a USDA loan if you're doing 100% financing and then be refinancing to a conventional. But yeah, same thing. So FHA, if you started with an FHA loan and you've reached that 80%, or even if you haven't, maybe you're closer to 80%, then you could just refinance into, assuming you qualify, refinance into a conventional loan. And then, have that little bit where you make the PMI payment and then it falls off, or you get rid of it completely. So lots of different ways that you can get rid of that if it's been some time since you've purchased your home.
Good. Any way you can save, us as LOs, that's kind of our job, is to understand it. Let me show you the comparison. Like, let me show you the apples to apples, and then you tell me what makes sense to you.
I have a refinance that still, it's been years. It keeps me up at night. So because she didn't refinance. That was the thing.
She missed that mark.
And I still think about it. Okay, so she had a home that she purchased it as a primary residence. So now it's an investment property, but it was still financed as a primary, right? Gotcha. She hadn't refinanced it. So it was a higher interest rate. Okay. And I said to her, I can lower your interest rate by a lot. Okay. A lot. So much. I can lower your loan term, even though we're doing this as an investment property now, which typically investment rates are going to be higher than your primary residence. I can still lower it as an investment property. I can cut down your loan term. I can save you hundreds of dollars a month. But she just couldn't understand what a refinance was. And I think about that all the time because I'm like, was I explaining it wrong? Did I do something wrong? No. But she just couldn't understand what it was.
Like, I'm going to take the benefit was to another loan.
Yeah,
this is going to be your payment now.
Yes, but she thought she just couldn't wrap her head around the fact that the first loan she had was going away.
Oh.
And she thought that I was trying to convince her to take out a second loan.
What?
And I kept trying to explain to her that wasn't the case. But she'd never done it before, and she was really scared.
Yeah.
She was really, really scared. And so she was like, you know what? I'm fine making the payment that I have. I'm just going to leave it the way that it was. And I was like, oh my God,
like, so much money you can save.
I could save you so much money.
Did you do that comparison? Like, you're going to save this amount of hundreds of dollars.
Yeah, but she just didn't understand.
Oh, wow.
I know. I think about her all the time.
I'm
sure she's doing fine because she could afford the higher payment, but I was like, but you don't have to.
Right.
You don't have to. So,
but ultimately, it's up to her. So, like you said, if there is a benefit, you compare them. No, I'm fine. I'm fine.
And
with
I do tell people, like, peace of mind that is a benefit as well.
Yeah.
That, you know, like if it brings you peace of mind,
Yes.
that's, you know, we don't want to cut that short.
Right.
But yeah, I just think about her all the time, and I'm like, there were
Well,
hundreds of dollars I could have saved this woman, and
Well,
she
guess
didn't
what?
let me.
She's fine with her payment. And you should move on. Like, help the ones who really need to save that money. Take that energy that you have over the last few years and be like, you know what?
I know.
I can put that into that person because I know they need
Yeah.
that, you know, couple $100. So
I know.
But
You're
yeah,
right.
that's kind of how we are a loan officer.
Yeah.
It's hard not to kind of get engulfed in, you know, stuff like that because it's like, I can see it. I'm just trying to get you to see that there is a benefit. And anytime you can save 100, you know, how many hundreds of dollars, why not?
I know.
Like, why would you not do that? But I know you did your best, Alyssa.
Thank you.
And don't let nobody else tell you otherwise.
Thank
even
you.
yourself.
Thank you.
You did what you did.
Thank you.
And you did it the best way you could. So,
What's
want to
next?
end here?
Yeah.
We kind of went over that already. So.
Yeah.
All right. The big NAR. How you pronounce it?
NAR.
NAR?
Yeah.
Okay. Because I think I called it something different. But NAR. What does it stand for?
The National Association of Realtors.
Okay.
Yeah.
So they have a settlement.
They do. Mm-hmm. So no more putting commissions on the MLS.
Yep.
You know, I've already heard some realtors talking about other ways that they're just, you know, gonna get around that. So we'll kind of see what that changes. It kind of sounds like maybe it's just gonna change the platform in which those are listed because, you know, they can't really stop them from putting it on social media or, you know, on their own websites or something like that. Yeah. So we'll see. But I mean, the biggest change is yet to be seen. What the culture around who pays the buyer's commission is going to be. So is it going to be the seller? Is it going to stay the seller? Or is it going to be the buyer? So I've been trying to get my buyers ready for it a little bit when we go over, you know, after I pre-approve them and we're going over what their loan options are. Okay. I'm talking to them about, you know, here's your cash to close. Yeah. However, you need to talk to your realtor about what their commission is going to look like because it could be different. I don't know what it's going to be. Everyone, just like we were talking about our realtor relationships, everyone's going to be different. Yeah. And so you need to know if their commission, whatever that's going to be, if you're paying it, that's on top of what I'm talking about today. Okay. So I don't want you getting blindsided by that. You know, so I know some loan officers are just putting it on their estimates already. Mm-hmm. They're putting, you know, 3%, I think. But I mean, even still, I've had some people that have talked about doing less than 3%. So you just never know. And I don't want to tell somebody that they don't have enough money to buy a house if, you know, at the end of the day, it's going to shake out to be less than what it was. So, you know, I'm disclosing what I know for the loan. Yeah. And then I'm referring them over to the realtors to talk about that side of the conversation. Yeah. You know, of course, that's still going to be money that we need to source. Mm-hmm. But, you know, we just don't know what it's going to look like yet. It's, you know. Yeah,
having a conversation up front, I think is going to help clients because I think that's a great idea that you're doing. Just putting it out there so it ain't like, oh, no one never said anything about this. It's like, so let's just go ahead and put it out there. Some of the realtor friends I've had said they're just going to kind of let them know, you know, when they have to sign their agreements and things of what the commission could be for the buyer to pay them. So, you know, some is already say they kind of just gonna put it out there. And then, but yeah, I think that is something that as lenders, we can just, you know, we kind of ask our clients because we're getting all up in your business anyway. You might as well, look, did y'all talk about your realtor stuff, your fees and things? And just like, they don't have to tell me exactly, oh yeah, I know I'm gonna have to pay this amount of money. And I'm like, I'm not really looking for it. I just really want to understand if they actually know what it is.
Right. So, yeah. Yep.
Yeah.
Yeah, I mean it's definitely a big change to come. And then there is the scare that the buyer's agent is going away, which I don't know. I have a hard time thinking that that's what it is, but I could see it if people are just completely unwilling to pay the buyers. Like if sellers are unwilling to pay for the buyer's commission,
right,
and then the buyers say, I'm not paying for it either, so they just go out on their own. I do see a world in which that could happen.
Yeah.
And then, it comes back to how do we then,
help our
clients because there's only so much that I can advise you on.
Because we're on the buyer side, basically.
Right,
So we're like,
Yeah, and I'm not a real estate agent, so there is a lot that I can't.
You could be in North Carolina if you wanted to. You can be a realtor and a lender in North Carolina.
Are you sure?
I'm positive.
Really?
Yes.
Wow.
It's certain states that do
I didn't know
that. A friend of mine told me about it. I'm like,
that sounds like
it's enough with the papers.
Yeah.
And then I got to go show somebody a house.
Yeah.
Oh no. No, I'm be like, girl, the house right there. Go in there and see what you see. No, I ain't gonna do that. I'm like, I can't. But yeah, there is. So that's one of the calls we had with our company, and they explained that some states have that, and some states some realtors are already kind of going into a lender role to be able to do that. So. Yeah.
Wow.
So talking about the NAR settlement it's going to open up a lot of different windows.
Yeah.
So it's just kind of like you say, how is it actually going to all play out in the end? As of right now, we don't know.
Yeah.
Like we don't, but yeah.
Yeah. But if you guys have questions about it, we're still digging into it ourselves. So comment below, let us know what your questions are. We'll definitely research that and talk about it on our next video.
Yep.
I think this is probably something that we're going to be talking about for a long time, just kind of seeing how it plays out.
How progress.
Yeah.
All right. Well, listen, thank you again for our lovely conversation on our lovely brown couch. But no, always good conversation with you.
See you next time.
See you next time.
Bye.